Welcome to Lease Talk Africa, powered by Velocity Global Leasing, where leasing knowledge meets African opportunity. Today is our 7th episode, and I am your host, Dr.Roselyn Mwaura. Today we will be looking at a very interesting topic, one that will help you advise your customers accordingly, and one that will help businesses expand more efficiently. And the topic is sale and leaseback. I'd like to tell you about a deal that I once lost during my career, not dramatically, not with a fight. Deal just stopped. It couldn't fly over to execution. The business was sound. The numbers worked. The need was real. There was capital, about 30 million Kenya shillings of it, sitting inside 3 pieces of owned equipment that nobody knew how to unlock. I was in that room. I watched it happen. I watched credit ask me questions, and I couldn't answer at that point. And I have carried that moment with me for years. Not out of guilt. I was not in a position to change it at the time, but as a reminder of what this industry costs people when the knowledge is not in the room. A reminder of why this platform exists today. So it's not enough to work hard sometimes in our continent here. You have to know the tools, because the tools are the ones that make the difference. Today, that knowledge is in the room. Today, we go deep on sale and leaseback, from first principles to full execution. By the time this episode ends, you will understand this structure well enough to have an intelligent conversation with any banker, any leasing professional, any CFO, any customer, and that is my promise to you. So there's a specific kind of frustration that I hear from professionals across this industry. You are competent, you are experienced, you have built real things, and yet there are conversations in certain boardrooms, in certain deal rooms, in certain meetings with either international partners, investors, clients, where you feel a gap. Not because you're not intelligent enough, but because nobody ever taught you this part. Nobody ever sat you down and said, here is how a sale and leaseback works. Here is when to use it. Here is what to watch out for. That gap is not your fault, but it is yours to close. And I hope by the end of this podcast, you will be able to close more deals and assist more customers. The gap between where you are and where you could be is almost never talent. It is almost always access to the right knowledge at the right time. I want to reframe something before we go into the mechanics of sale and leaseback. Sale and leaseback has a reputation in some circles as a tool of last, something you do when the bank has said no and the options are running out. I really want to dismantle that reputation completely. The most sophisticated real estate companies in the world use a sale and leaseback proactively. The most successful airlines run their entire fleet strategy around it. The Gulf's logistics boom was built on it. Gulf, Gulf. This is not a distress tool. It is a capital management philosophy. And Africa's business leaders deserve to have it as part of their arsenal. Not as a rescue option, but as a deliberate, confident, strategic choice. A sale and leaseback is not what you do when you're out of options. It's what you do when you're thinking 3 moves ahead. And this is the promise. First, at the end of this episode, you will learn, or you will have, the full step-by-step mechanics of a sale leaseback transaction. 2, a real worked example with a specific specific Kenyan numbers. How to structure the deal to protect your position as the lessee. The exact mistakes that turn a good deal into a costly one. And lastly, what to look for in a leasing company before signing anything up. This is the most technically detailed episode I have recorded so far, but I want you to notice something as we go through it. Every number, every clause, every structuring decision connects back to a real business outcome. I'm not teaching you theory. I'm teaching you a language, the language of deal making. And once you speak it, you cannot unspeak it. So let's dive into the full mechanics. 1. How a sale and leaseback transaction works step by step. Step 1. Valuation. The business and leasing company agree on fair market value of the asset. Methods include market comparables, depreciated replacement costs, and income approach for revenue-generating assets. Step 2. Sale agreement. The legal transfer of ownership from the business to the leasing company at the agreed value. Step 3. Leaseback contract. A simultaneous agreement for the business to lease the asset back, now as a lessee and not the owner. Step 4. The payment structure. An agreed monthly or quarterly rental payments over a defined term with a clear end-of-term options. Step 5. The end-of-term options. The lessee can purchase the asset at residual value, return it, or choose to extend the lease. And the last step, IFRS 16 impact. The leaseback creates both a right-of-use asset and a lease liability on the balance sheet. But the liquidity released is now working capital. It becomes working capital immediately. Now, I know that was a lot of steps, but let me give you the simple version. You own something valuable today. A leasing company gives you cash for it. You keep using it, you pay them back over time, and in the process, you get liquidity, you get certainty, and in many cases, you transfer the maintenance and insurance headache as well. That is the deal. Everything else is the detail. Important detail though, which we will cover, but do not lose the essence in the structure. Now the numbers. A real-worked example. So let us look at a business that has a fleet of 25 million shillings. That's roughly the market value. They would want a 36-month leaseback. What is the impact of this restructuring? 1, business profile. So this is a Nairobi logistics company, 5 trucks, combined fair market value is 25 million. The transaction is a sale to a leasing company that generates a sale to a leasing company for 22 million shillings net of transaction costs. That is what will be available immediately as working capital to the business. Then the leaseback structure, 36-month finance lease at 680,000 per month. I hope you're with me up to that point. Previous ownership cost was 920,000 per month, all in debt, servicing plus maintenance plus insurance. Now, the monthly net improvement of Kenya shillings 240,000 is what has been freed up every single month. I hope you're with me. So from the 920,000 per month that the business was spending, now the restructure has brought it down to 680,000 per month with an availability of Kenya shillings 22 million. Now, 36 monthly total improvement will be 8.64 million in additional working capital over the lease term, plus 22 million shillings injected at signing for growth, expansion, or debt clearance. Let me sit with those numbers for a moment, because I do not want them to be abstract. That 240,000 shillings a month that the customer has saved from 920 monthly to 680 monthly can be used for so many things in a business. It could be salary for a salesperson. It could be used for market expansion. It could be the budget that the business has been deferring. And 22 million shillings on sign-up, that is the deal you could finally pursue. The equipment you could finally upgrade. The facility you could finally secure. These are not accounting entries. These are choices. Choices that only become available when you know the tool exists. So let us look at structuring it to protect yourself. The clauses that matter and the mistakes to avoid. 1. The residual value clause. Understand exactly what you're committing to pay at end of term if you want to repurchase the assets. Negotiate this before you sign, not after. 2. The maintenance responsibility. Negotiate clearly with the leasing company who bears maintenance during the leaseback period. This is your primary cost reduction lever. And If the leasing company can take over this, that would be very good for your company. Know the cost of exiting the arrangement before term. Some structures make this prohibitively expensive with a reason. So be very keen to look at the documentation and the agreement before signing. Asset condition requirement. Understand what standard the asset must be returned in at end of term. Lastly, choosing your leasing partner. Look at their regulatory standing, their financial strength, their track record with sale and leaseback structures specifically. Do your homework on the leasing company. Now, I have seen deals where business owners signed a sale and leaseback agreement without reading the residual value clause carefully because they got the liquidity, they got the relief, but 3 years later, the repurchase price was so high that the asset was effectively gone. That is not the tool failing. That is the detail being ignored. In my career, the most important advice I can give you is this. The quality of any lease deal is in the language of the contract, not the headline number. I know the headline number can be confusing. Learn the language or work with someone who has. So earlier on today, I started with a deal that died. I was telling you about this deal that died because the knowledge was not in the room. I was not fully equipped to defend that transaction. I would like to close by saying this. That story does not have to be yours. The knowledge is here. The tools exist. And for the first time in this industry's history in Africa, there's a platform dedicated entirely to putting that knowledge in the hands of the professionals who need it most. That is what VGL is all about. That is what this podcast is all about. And I'm deeply honored that you are part of it because Africa's growth window is now. The professionals who are ready will definitely own it. At the Velocity Global Leasing Equipment Masterclass that is going to be held in 2 weeks on June 5th, we do not just teach sale and leaseback theoretically. We model it. I will walk every single participant through the VGL deal profitability and ROI calculator in real time. You input your own numbers and you see your own scenario. You live with a tool you can open on Monday morning and use it as an actual deal. The investment is $97. That is it. But you will have a framework, tools that will guide you into your future deals, plus a community of leasing professionals who are building this industry together. The link is in the show notes below. I cannot wait to see you there. This is Lease Talk Africa, powered by Velocity Global Leasing. I'm looking forward to seeing you there. Bye-bye and have a good evening.